All right, everybody. Welcome to day 14 of my Forex trading journey. Hope each and every one of you is having an absolutely amazing day so far. As you can see, I've gone ahead and I've placed myself into a sell trade with platinum. We could see that we had a arrow with a buy arrow first pop up on this particular candle right over here. And I believe that is because it broke a support that was at this particular area. Now we have our next candle opened, and we also do see that we have a sell arrow in that direction as well. So we are going to go ahead and until that particular candle closes, we will wait and make sure that arrow stays there before taking our next trade on it. And once again, I hope everyone is having an amazing day so far. We are very close to the end of the trading week, and I'm very excited to have us move forward in the right direction. As so we go ahead and take a look at some of the opportunities that are out in the market today. And here we're gonna keep doing the same thing. We're gonna just keep moving forward. We're gonna follow the plan that has been laid out for us. Day 14, we have not deviated away from the plan, and that is going to help us as we move forward. And so part of that, as far as just following the plan, knowing when to enter, exit, risk management, and the trend, of course, because of the other reason we be taking this particular trade is just the fact that we've been following this downtrend right here. As we could see, that downtrend is absolutely being respected on platinum right now. But the idea is we want to go ahead and by doing this, we are looking for we're of course looking for all these different confirmations right here. And we're still keeping it very simple, right? We're the if you want to look at this in terms of the most basic of what we're doing, it's just we're just following the direction that the arrow gives us. Because while we could talk about, we're in a downtrend, we're in a bearish market structure, we could talk about and we could break it down, we could deep dive into it a lot more if we wanted to. I do want to emphasize that if we want to just look at it on a scratching the surface type of deal, all we're doing is following the arrow and making sure we're using the appropriate lot size to trade on this particular pair. So it looks like I also have a sell arrow that is coming along here. Now, just taking a look here. Let me just see here. Just seeing here. 48, 78, 16, 26. Okay. So I'm just gonna wait for that candle right there to close. And then we will go ahead and get into a trade for gold. And then we're just waiting on this candle right here to close, and then we'll be getting into another sell trade for platinum. So we've got a couple of things in the mix right here, which is absolutely incredible, absolutely amazing, and it's perfect. Now, I was talking about the trend, right? We're talking about the market structure. We're talking about risk management. We're talking about our game plan on how to enter and exit these trades. And we want to talk now about, our ingredients of success, when it comes to Forex trading. And, the first thing that we want to talk about with the ingredients of success is the fact that the additional reward we receive for taking this risk of trading in the forex market, because not, as we could see, not all trades that we've been doing that we have done have been guaranteed. There are times where we've gone ahead and we have won. There are times where we've gone ahead and we have lost as well. Now, the times that we have won and we've gotten profits, that's what we would call a risk premium, or just the additional reward we receive for taking that additional risk. And of course, to balance that particular return, all right, let's place a sell on gold. Okay, again, we're just following along the downtrend that gold has created for us. So we're going to have that right there. We're going to do the same thing on this account right here. Okay. So coming back here, now the only really what we're really doing here, or the idea of our trades, is just we're just following along with the downtrend. So let's get our ingredients of success here. It might sound very similar to the rules we have in place, but I want everyone to see the ingredients of success in the eyes of what our game plan is. So first, we identify the arrow. So whether that is a arrow pointing down for a sell or a arrow pointing up for a buy. Two, we then understand the trend that we're in or the market structure we are in. So the reason that this particular, I'll just move this out of the way. The reason that this particular arrow popped up the way it did was because we noticed that we were in a bearish market structure. So, we're creating, I'm gonna just get my pen. By the way, I'm just taking a look at silver. Okay, that's fine. And then how's platinum doing? Okay, platinum is doing its thing right there. Perfect, perfect. Okay. So we could see that throughout the course of history beforehand, we've been creating lower highs and lower lows. That's the ultimate definition of a bearish market right there. So we're going ahead and we're taking advantage of the fact that because it has been selling off, that we're still going to trend or continue in that particular direction until proven otherwise. And what I mean by proven otherwise is if that particular arrow goes away. But, that will, we talked about how we would go ahead, and you've seen how I go ahead and prepare for that. So we'll wait to do just that. We could see that right now we have a price right here just kind of hanging along. Oh, let me go ahead and actually, now that I think about it, I believe I was supposed to take a sell when that candle closed. I did not take a sell when that candle closed, so we'll just put a trade right there. And now we could see that the arrow has moved on to the next candle. So we're going to go ahead and wait for that as well. Okay. So there's a couple of things going on right here. Of course, we got our sell trade with gold. We got a couple of sell trades with platinum. Another one is most definitely on its way as well. So we're kind of waiting in that particular direction too. But yeah, so we identify the arrow, we understand the trend that we are in or the market structure that we are in. And then number three, we exit the trade in one of the three following ways. Now, that's either when the account balance hits 3%, when the trade that we are in hits 30 pips of profit, or the arrow disappears. One of those three ways is how we exit the trade. And this right here, I'll give everybody just about 5 seconds to, actually, let me do this. Okay, cool. I'm going to go give everybody about 5 seconds to go ahead and copy all that. 5, 4, 3, 2, 1. Okay, perfect. So this right here is going to allow us to make sure that if we keep doing this recipe consistently, this would allow us to make sure that we have the long-term success or the long-term delicious desserts, if we want to keep the cookie analogy. That will allow us to make sure that we are moving in the right way. Now, as far as, again, just understanding the type of markets that we are in, I compare it to stocks. On average, the market is down about 1 in every 4 years. At the same time, it's useful to recognize the market has made money 3 out of every 4 years, right? So what does that mean for us, again, in the grand scheme of things, is that we understand, we take another sell trade right there, we understand, and that's on platinum, we understand that, of course, nothing lasts forever. No bull market lasts forever. No bear market lasts forever. And so it's important to understand, okay, when we know, right, when we know when to get out of a particular trade, but it's also just as important to understand when to hold on to the trade until it is time to do so. And again, that goes back to, if the arrow disappears, we're done with the trade and we move on to the next opportunity. And so over time, we're going to see a lot more bullish markets than bear markets. So that helps us prepare for the opportunities to buy a lot more. And as you can see, as far as the trades we have taken so far, in the grand scheme of just going back to the trading history, we've noticed that a lot of our trades so far, we could even take a deep dive into our account history here. So yes, we had a couple of sells, but a lot of the time, I would say more so than not, we've closed trades when on buy trades. We've hit profit on buy trades more so than our sell trades so far. Just, taking a average look at everything. And so that gives us the cue to know, while there are sell trades coming that we can take advantage of, most of the time we're going to take advantage on buy opportunities as well. So that understanding that information just gives us a clue as to what to expect as we move along in our journey. And then if we can always make sure that we remember this adage, over the long term, the market news will be good. That means that even though we know that there are going to be some bearish opportunities that are out there, it's always good to know to prepare for those times where a bear market turns into a bull market, and then a bull market turns into a bear market, and we know the plan for when those particular situations arise. We know exactly what to do when we come into those particular situations. So we're really just allowing these trades to play out right here. So of course we got a sell trade on gold, and then we also got a couple of sell trades on platinum as well. So I'm cycling back and forth and allow myself to make sure that I'm keeping an eye on all these particular trades out here. You can see that so far platinum is moving forward in the right direction, which is absolutely perfect, absolutely fine. And again, really what we're doing here with platinum more so is just, again, it's on a demo account. We're testing its sustainability on the trading accounts that we're doing right now. And if it works in our favor, then of course I'd be more than happy to use it. But if it doesn't, we also know that we don't need to necessarily take those trades if we do not want to. Okay, everybody. Okay. We do have a little bit of a sell tick right there. So that is good for any of the trades that we are currently in with platinum at the moment. So again, we're just kind of letting that go and letting it do its thing. Now, as far as the next thing that I want to go ahead and talk to everybody about is what I'd like to call the rule of 7. Now, the rule of 7 dictates that we simply start with an achievable goal and keep raising the bar as you progress. So what does that mean for us, right? So we can certainly understand that right now on our live account, our balance number and our equity number is vastly different. So there is all this particular drawdown that is going on at the moment. And so rather than try to climb up all the way up to $330 right now, our objective, our goal is to first make sure that we win this trade and get about 30 pips. Then we wait for the next opportunity. Then we get 30 pips. And we wait for the next opportunity. We get 30 pips. We get an arrow in the opposite direction. We close the sell trades and we work our way back up to the buy trades that are currently in drawdown, and we get 30 pips off of that. So our goal, our objective, if you will, is we're just looking to just take this one trade at a time. We have our risk management game plan, which is the 0.01 lot size. And all we're really doing is just making sure that we stay consistent with those trades. We're just staying consistent and just making sure that we take upon, look at our account and understand that we just need to concentrate on one trade at a time. We don't need to get it all at once, but we just have to concentrate on one trade at a time. And so the lesson is to not underestimate the awesome power of disciplined trading combined with long-term compounding, right? Because all we really need to do is just win these particular trades one trade at a time. We don't have to do anything fancy. We don't have to hit for the home run each time. All we're doing is we are taking what the market gives us. And so if the market wants to throw us a sell opportunity, then we take that sell opportunity because of what we know before that arrow came about, the downtrend, the bearish market structure, and vice versa for a buy arrow. If the buy arrow comes about, we know that before that buy arrow came about, there had to have been a bullish run, a bullish market structure, a uptrend that then allowed us to go ahead and look at taking that particular trade. And so here we go. We're just kind of, we're waiting for this particular trade to do its thing. Again, we're not necessarily looking to do anything as of right now. We definitely first want to go ahead and make sure that we are just allowing the room for this trade to play out. And when the arrow says, okay, we're no longer in this downtrend, then that will be our signal to get out. But at least for right now, we don't have to necessarily panic. We don't need to necessarily worry about the trade. We just got to let the trade do its thing. We got to give it its room to do what it needs to do. And then we can go ahead and move forward. Now, there is something that is crucial to recognize as there is an enemy. And it's going to sound so cliche, but there is one enemy in Forex trading that is hard to defeat. He is this particular enemy, very, very, very tough opponent. It'll take a lot of strength and a lot of willpower to crush it. However, once it is crushed, you can then go ahead and become the master trader that you want to be. Now, you might be asking yourself, well, that's all great and dandy, but who is this enemy? Well, again, it sounds so cliche, but your worst enemy is likely to be yourself. Now, here's why. We've talked about the circle of anxiety, right? And we're certainly going to, I know, review that topic as we move forward throughout the trading journey together. However, it is very important to know that you are indeed your own enemy. The single biggest threat to your financial well-being is your own brain. The human brain is perfectly designed to make dumb decisions when it comes to investing. So we think about it. We have all of our rules in place. However, our brain could say, or our mind, our heart can say, wait, I don't know about these rules. I see a sell, and even though that seller disappeared, I still think it can come down, even though we know that that downtrend is over from everything that we've seen. Oh, wait a minute. 0.01 lot size for every 100. No, we could certainly double that up a little bit. We've done this for the past 14 days. I know we can up that lot size. Even though it's an uptrend, the uptrend is now over. The uptrend is now, even though I don't have a confirmation, the uptrend is now over. It's over. I'm taking a sell at an uptrend. I see this downtrend. I think we need to go ahead and buy the dip now. Even though we don't have a confirmation that the dip is over, we need to buy the dip now. And see, there is then, just looking at these trades, don't mind me. There is then those thoughts that the brain is giving us that's designing us, or that is allowing us to fail. And then if we fail to master our own psychology, we may ultimately become the victim of a costly form of financial self-sabotage. Now we're following our plan, and we've had some up days, we had some down days, but we're still following this particular plan that we have in place. And it's very easy to get into a state, considering what's been going on this past week, where that plan is getting harder and harder to follow. That plan is starting to show some of those short-term potholes, some of those short-term setbacks. And it can be very daunting to someone who's just starting out in the market. And so we have to master that psychology. We also have to master the fact that we're not going to win on every trade. And one good trade can take all of our bad days that we've had and just say, okay, so you had a couple of bad days. How about this great day? And if we can master it like that, we are going to be able, our ability to financially prosper in these markets are increased exponentially. The problem is that our brains are wired to avoid pain and seek pleasure. Instinctively, we yearn for whatever feels likely to be immediately rewarding. So what does that mean, immediately rewarding? Well, let's go back to that circle of anxiety, right? So we said that in that circle, 90 to 95% of our trades go into drawdown. And then we go into the next part, which was the 1 minute play-by-play analysis. Oh, here we go. We got this 1 minute. We're in the buy trade. We got this next 1 minute buy candle. It's going up. Oh, that's great. That's great. Oh, I see a little bit of profit. And when you see that, you go to the next spoke of the circle of anxiety. You go ahead and you close that particular trade right then and there, and not stick to the fact that our objective the whole time was to get 30 pips in profit before we close the trade. Or at least that's my goal. Your goal could be something different. That's completely fine. But did you stick to that particular goal, or did you immediately close out the trade with the tiniest bit of profit because that was immediately rewarding? Our brains are particularly prone to bad decisions when we're dealing with money. Neuroscientists have found that the parts of the brain that process financial losses are the same parts that respond to mortal threats. And we get it. The brain, right? The brain did not have the capability that we have now, of course. When this brain was designed 5,000, 6,000, 7,000 years ago, all it was thinking about was, trying to run away from predators or even trying to protect themselves against other people because, other people might want all this different stuff. But our brains were designed for survival mode and survival mode only. It wasn't designed to play in these particular markets as we're doing right now. Just taking a look at platinum. It wasn't designed to play in these markets. What counts is not reality, but rather our beliefs about it. So going back to that inner Forex trade magic that we had talked about last week, part of it was, of course, the knowledge about the game. The other component was your why. Why are we in the market? However, that other component that was important, all the ingredients, we talked about the ingredients of success earlier, all the ingredients of our Forex trade magic. Okay, the arrow just moved to the next candle right here, so I'll pay attention to that. But the ingredients of that Forex trade magic that we had talked about before, part of it was our belief. And that our belief was we are great Forex traders, and we have to keep that belief in perspective that we are master Forex traders. Again, what counts is not reality, but rather our beliefs about that particular reality. So if your mind is coaxed to believe, even if you have to coax it, even if you have to persuade it numerous times, if you make your mind believe that you are a master Forex trader, that you are a 10, 11, 12 counting figure earner. Now, whether that's your goal or not the point, but if you believe that you have a similar goal, or if you want to grow, at least get to a certain point that you're going to be able to make this, or all these beliefs. And of course, there's a lot to that. Journaling is a big part of that for me. I journal every day that tells me that I'm a master investor, that I'm a 10, 11, 12 counting figure earner. I've been doing that consistently for a prolonged period of time. So I've already had those beliefs put into my body so that I can do well in the Forex market, no matter what the reality says. And it may seem overly simplistic, but all that's really required is a set of system solutions, a simple system of checks and balances to neutralize or minimize the harmful effects of our faulty Flintstone wiring. So what are those simple systems of checks and balances? I go ahead and place that trade right there. So what are those simple systems? What are those simple checks and balances? Well, the thing about it, I'm just checking it. Nothing yet. Okay. Now, those checks and balances are, when do we take the trade? When the arrow appears. How come we're taking that trade? Again, I know I am repeating myself, but that is to make sure we get the concept and it's wired into our brains for the best chance of success. Now, again, we take the trade when we see the arrow. How come we took the trade? For a sell arrow, we either noticed a downtrend, a bear market, or both. How come we take a buy arrow? We noticed an uptrend, we noticed a bull market, or both? When do we close the trade? When a trade hits 30 pips in profit, when our account balance hits 3% account gain, or when the arrow disappears. That's it. There hasn't been any tweaks needed. There hasn't been anything that we need to do fancy wise, for lack of a better word, fancy wise, until proven otherwise. And I say that because I know that not every system is perfect. I know that every system does need tweaking. And certainly as a teacher, you always learn as a student. So I understand that that part can come at any time. Now, investors need these simple systems, these rules and procedures to protect us from ourselves. If I didn't have these simple set of rules that I follow strictly, religiously, mechanically, the emotions of myself, the emotions of being a trader would always come to bite me in the ASS, and I'll let you figure out what that spelling means later. But the idea is that I've got these systems, these rules in place to protect myself from doing something that I know I should not be doing. Okay. Oh, I just need to. Okay. All right. Great. So we got 2 of those platinum trades closed because they hit 30 pips in profit. They hit 30 pips in profit, and that's perfect. So we keep the show rolling. Okay, let's come back here. So we see that we're still in, we're still kind of working on gold right now. Perfect. So we're just allowing to see what the trade does at this particular moment. But that's all there is to it. We have our systems in place to protect us from ourselves. Now, another fundamental truth that a lot of great investors know is psychology. We talked about psychology before, but psychology either makes you, okay. It either makes you or breaks you. So it's imperative to have a robust system that enables you to stay on target. So we have our system. So far, we are on target with what we need to do here. There hasn't been any change to that necessarily. Now, trading, or really, we can even put this into other spheres of life, whether it be marketing yourself or whether it's building your business or whether it is a variety of things. But we know that 80%, let's see, we just gotta, let's get that next trade in there. We saw that the arrow moved and we have our next arrow moving up. So we'll just wait for that candle to close before making our next decision. But we know that 80% of success is psychology and 20% is mechanics. If we know our limitations, we can adapt and succeed. If we don't know them, we're going to get hurt. So we know our limitations. We know that we can't be perfect in the market 100% of the time. We know that we are going to be wrong. We've seen ourselves be wrong on multiple days, not just one day, not just one trade, but multiple trades. So we already have the experience, right? I'm just going to close that. 29 pips. That's fine with me. So coming back here, we know that we have limitations in terms of we can't be right. We can't be perfect in the system. We can't be 100% accurate, as we don't know what the market will do, because of course we don't have a crystal ball that can predict what the market is going to do. And so by creating the systematic solutions that we have, we can free ourselves from the limitations of desiring to be perfect all the freaking time. We can free ourselves from the tyranny of our conditioning and operate the control room like one of the best investors on the planet. We can do that. We can have that ability. It's just a matter of allowing ourselves to believe that we can indeed have that particular control. Now, let's talk about some real mistakes, right? Let's talk about some real mistakes that can happen as we are trading. Now, mistake number one is seeking confirmations of our beliefs and why the best investors welcome opinions that contradict our own. So again, that comes back to, of course, me being a student, right? Understanding, learning as we go along, learning our system more and improving our trading skills day by day by day, going into deep dives in our trades, going into deep dives of what we're doing as traders, and ultimately finding the solutions that work for us. For investors, confirmation bias is a dangerous predisposition. Let's say, for example, we love gold, right? So, we're absolutely fallen in love with gold. We can always think, oh, gold is always a buy, 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 buy. We should be buying. The look at all this inflation that's going on today. How come we're not buying? How come we should be just buy, 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 buy? Or even dangerously, oh, gold is so inflated. Look at all this inflation. We should keep selling, sell, 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 sell. Buy, 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 sell, sell, sell. Yet, if we don't know, or if we don't learn when to change that or adapt that, or that bias is flexible when it needs to be, then we're putting ourselves in a lot more trouble than is necessarily worth. Our brains are wired to seek out and believe information that validates us owning it. After all, our minds love proof, especially proof of how smart and right we've been, right? And of course, and that's another thing about being vulnerable in this position right here. We all get to see exactly, and we'll do another cost average right there. We all get to see if I'm either right or if I'm wrong on these trades. We all get to see that. There's no hiding from that particular truth. I'm either going to be right on the money and these trades are going to go in our favor, or I'm going to be absolutely wrong and these trades don't go in our favor, right? There's no I was right the whole time. No. That doesn't matter what happens in the future. All we can say is, hey, I was either right on this trade at this particular time. You only get rewarded for being right at the right time. You don't get rewarded for being right at the wrong time. So even if we go back up these trades right here and we start, being able to eliminate them because of some of our other strategies, that doesn't give us the right to say we were right the whole time. No, we have to admit that at that particular point in time when we first executed the trade, we were absolutely wrong about it. We were absolutely wrong about it. And that's fine. And so what's the solution to all this, right? We ask better questions. And I always tell people, hey, if you have a question, I'm especially going to do that as we move forward. If you have any questions, feel free to drop a comment on the video itself. You can go into the YouTube comments and ask a question, or you can find me on Facebook. You can find me on Instagram. And as of yesterday, now I've always had a Twitter account, but I've never used it. I figured, what's the point of having Twitter? But I realized that, what, it's cool to have a Twitter account. And, I know that people use Twitter when Facebook or Instagram is not a option for them. So everybody, if you would like to go ahead and follow me now on Twitter, you can go ahead and you can do just that. And my Twitter username is, there we go, WC Empresario. You can follow me at WC Empresario on Twitter and ask your questions there. Because I know that each and every one of us has a different channel, different media platform that they like to use preferably. And I understand that there's a lot of other social media platforms that I may or may not get myself into. Again, it's not a matter of getting into all of them right away. And I actually had to learn this from Dean Graziosi when I was at the World Summit. So I just got to go ahead and make sure I build these channels one by at a time when it is necessary. So with that being said, you can follow me there and ask your questions right there. But coming back to our solution, ask better questions and find qualified people who disagree with you. The best investors know they're vulnerable to confirmation bias and accordingly do everything they can to counter this tendency. And the key is to actively seek out qualified opinions that differ from my own, differ from your own. Basically, get information that is different from what you've been doing. And so that's why I'm blessed and grateful to have a mentor like Sal Leto, a mentor like Maurice Katz, a mentor like Dr. Luis Ariaza on my side as I work on my trading journey, because I know that their opinions may differ from me. And the beauty of that difference of opinion is I know that they have more experience in the market than I do. I only have about 2 years of experience. Now, these individuals, Sal Leto and Maurice Katz in particular, they have about plus 30 years of experience on me. Oh, that's another close right there. Just cost average. Okay. So it's important to understand that I need to seek better people, or I should seek people that are going to help me along my trading journey. Of course, we don't want just anyone with a different opinion, but rather someone who has the skill, track record, and intelligence to give another educated perspective. All opinions are not created equally, right? So, for example, I'm not going to ask some person who's never traded in Forex market to give me an opinion of how I'm trading. They don't have any of the experience necessary in order to give me an opinion that I would deem as valid, right? Now, Sal Leto, he would be able to do that because of his unique position where he has done this before. But I wouldn't just necessarily ask anyone to give me that particular opinion. I would want someone who has, at one point in time, done the things that I would qualify as valid to what I'm doing, and their perspective will help shape me to become a better trader. So what do I mean by that? Well, the risk management principle rule that I apply was taught by Sal Leto. He gave me that particular principle. I had no idea that particular risk management principle existed. I've been trading just, blindly following this other risk management principle strategy that was not working, but I had proof in the past that I was winning before, so it was confirmation bias. It told me, hey, you're right on the money, so just keep doing that, and not understanding why it was working for me at the time. And then when I got Sal as a teacher, and he told me the rules of the risk management strategy, it made my eyes were opened a little bit more. And then we talk about my other mentor, Maurice Katz, who showed me, okay, this is a way that you can trade in the market cost averaging. Well, that was something I didn't know was possible before. So it didn't allow the need or the necessary risk to put all of my eggs in one basket per se. It's so difficult to be right in the markets. So what's effective is to find people who disagree with me and then find out what their reasoning is. The power of thoughtful disagreement is a great thing. As long as who you're talking to, the people that are looking at your accounts, they have what I deem, or what you should deem, I should say, a qualified opinion. Again, find people who have experience in these trading markets and not just some. Let me rephrase. Find people who are qualified to give you a reason for disagreeing with your trading, but don't find just anybody. Find the people that work in your field so that you can get the best advice. The key question, right? And I'm sure that there's a lot of this going on right now. A key question that you want to ask yourself is, what don't I know? No, what don't I know at this particular moment in time that can help me as far as moving forward in the right direction? You can benefit greatly as an investor by finding people you respect and asking them questions designed to uncover what you don't know. And that's very powerful. As we understand, we don't have anything in silver yet, so we're just gonna let that play out. But right now, we're focused on gold at the moment. We're focused on gold at the moment in time. So we'll go ahead, and there's another sell trade we're going to get into because the arrow did indeed move. So, of course, we let the trade play out. Other than that, I am going to go ahead and go into forexmarketfactory.com and just check to see if we've got anything that I want to keep my eye on. Okay, so we do got some news at about 7:45 my time. So it's about an hour in about 25 minutes from now. So just want to keep that in mind as we move this along. Now, mistake number 2 that investors make is mistaking recent events for ongoing trends, and why most investors buy the wrong thing at exactly the wrong moment. Now, one of the most common and dangerous investing mistakes made is the belief that the current trend will continue. There's actually a technical term for this psychological habit, and it's called recency bias. It's a posh way of saying that recent experiences carry more weight in our minds when we're evaluating the odds of something happening in the future. Now, that could be taken one of two ways. As we know, we're trading right now based on what we're seeing in the trend, right? So we're seeing a bearish trend still developing in the market until proven otherwise. Now, as soon as we get the key component that our bias, or not our bias, but our confirmations, once one confirmation on our plate, so to speak, is wiped away, the slate is wiped clean from what we're looking at, then at that point, we would have to go ahead and we would need to adjust. There wouldn't be necessarily any other way to do it. We would just have to go ahead and say, hey, our trend is now not going in that direction. And so now we need to go ahead and move forward in the different direction, or we have to go ahead and make sure that our account is protected, and we would wait for the next opportunity. Great things are not accomplished by those who yield to trend and fads and popular opinion. It goes back to what we were talking about with the most successful person of any industry. They do things they do things differently. They've got a different belief. They got a different strategy. They've got different unique ideas that are brought to the table that goes against the trend, that goes against the popular opinion, and that bring them to a sense of uncomfortability sometimes, that bring them to a sense of, ooh, because this is a little, for some of us, this could be perceived as uncomfortable, what's going on right here. The biggest mistake that the small investor makes is to buy when the market is going up on the assumption that the market will go up further, and sell when the market is going down on the assumption that it's going to go down further. Now, we know when to trade. So bringing this up, right? Because this is something very important, right? The idea is, if we really look at the market structure right here, how come we're really making these trades? So again, it comes back to the fact that we're in this bearish market structure. We're not placing our trades right here because the market is continuing to go down. No, instead, we're waiting for price to create what we call a lower high in this situation, which is where the arrow is. And the idea or the concept is, because price is continuing to follow that market structure, once we get up to the high point, we go ahead and we sell. That's how come the arrow is right there. So another way of describing that is, we sell high, we buy low. As we can see, we've got a little sell ticker right there. There's just something to keep in mind. So we sell high and we buy low. And that's how it should, and that's how our trading should be done. A much broader pattern of believing that current investment paths, a much broader pattern of believing that current investment trends are bound to continue. So again, everyone wants to buy when prices are going up. Everyone wants to sell when prices are going down, when instead we want to do the opposite of that. We want to sell when we see a high. However, we know that based on prior history, that that there has been more so prices have been going down. We want to buy at a low point. However, with the understanding that there has been a trend of when prices have been going up. Individuals tend to buy funds. Oh, let me hold on here. Individuals, again, they tend to buy funds that have good performance. And when funds perform poorly, they sell. So again, it's instead of, selling high and buying low, a lot of people sell low and buy high, which in the long term doesn't produce the best level of success for us. The way to do it is instead go the opposite way. Again, you want to sell when prices are high, and we want to buy when prices are low. Now, what's our solution? We rebalance, right? Now, we rebalance when it all comes. So the rebalancing in this situation in our accounts are when do we decide to exit the trades? It's when it's when we either get to 30 pips in profit, or we get to a point where we get to a 3% of our account balance, or we get to a point where the arrow disappears and we're no longer in the direction or the trend that we are at previously. Any one of those three things, that's when we go ahead and we hit what I like to call the rebalancing mode. What the best investors in the world do is create a list of simple rules to guide them so that when things get emotional, they stay the course and remain on target long term. This is emotional, what's going on right here, very emotional. Yet we have I already know what the plan is, and we've been following this plan for a while. So while things may have been a little rocky right now, I understand what the plan is to create that long-term success. And I have my checklist, or I have my simple rules. We know what our risk management is. We know what lot size I'm doing. We know when I'm entering the trade, and we know what's helping me guide myself to enter these trades still. And we also know specifically when to exit the trades, when we go ahead and we say, okay, we're done with these trades. We close them and we move on to that next opportunity. Now, we're going to talk about this checklist for what we like to call our flight deck. Now, as we're flying in this Forex trading journey together, so that we stay on course for what we're doing. It spells out where you're trying to go as an investor, what you have to watch out for, and how you plan to navigate the journey securely. We share our plan with someone we can trust. I trust, for those that are watching the video, I trust you guys to see what I'm doing. I'm putting myself out there. I'm being comfortable with being vulnerable to sharing what I'm doing. And whether you follow it or not, and of course you have questions on it, and I want to make sure we get those questions answered when need be. So again, you have all that information at the previous part of this recording that you could take a look at. And then by doing it in this way, it helps me stick with the program by making sure I don't violate my own rules with impulsive survival brain decisions. So by recording me in this way, so that it's all recorded in not necessarily live time, but I'm streaming. By me recording in this way, you are seeing me take my trades. Well, it's not live, mind you, but you're seeing me in my own live time taking these trades, with a real account. So, all this is real. I'm not, of course, except the demo trades, right? Because we talked about it. I have to test platinum on the demo before we can even talk about putting it on the real account. But again, the idea is that this helps me, like bigger point here, this helps me make sure that I stay on track with what I'm doing with my account, that I don't go into survival mode, that my brain says, you need to exit these trades now. No, we wait until we get to one of our 3 conditions before we go ahead and we close one of those trades. And because I've been recording myself doing this particular work for the better part of now will be 14 days, what this helps us do is it brings us, as I close that trade out, there we go. What this helps us do is it allows us to just stay consistent in our trading capabilities. Okay. Here we go. But it allows us to stay didn't mean to get too excited, right? But it's okay to celebrate those wins. Let's go, right? Just now we come back to balance. But the idea is, by doing this, I don't violate anything that I've been doing in the past. I'm not breaking my rules, right? We've been following the same plan since day one. We've had some great days. We've had some bad days. We had some medium days, but we've still been able to follow the same plan that we had put in place. And again, it's not like we're not going to have bad days in this market. You've already seen that. Day 3, day 4, day 9, day 10. You could even, we can even go from day 9 to about day 13 where it was just bad because there was no, well, one of those days, I think it was like day 10, day 11, day 12. You have to take a look at the recording, or I still have to review those videos. But more to the point, we know that there aren't days where we're going to win every single day. It's tough. I'm not going to say it's impossible for someone to win on those days, but we have to understand that losing days. And I had to learn this from Sal Leto. My mentor. It's that losing days are a part of the plan, and you have to prepare for them in the best way possible. And you have to allow your brain to recognize you don't have to win every single day to be long-term successful. It goes back to the fact that there is no requirement in these markets to be perfect. We can be okay with where we are, and we can move forward in the right direction. Think of this as the financial equivalent of having a co-pilot to clarify and verify that you're not heading into the side of a mountain, right? By recording myself in this way, by taking the trades as I do and being responsible for guiding each and every one of you and teaching and educating while this is all happening, it allows each and every one of you, in a sense, to be my virtual co-pilot, watching me do my trades. Whether you want to scream at me from your TV, like, Jordan, better make sure you're on course. But it is so true, right? Like, you guys are, by doing this, by recording it in this particular fashion, what we're doing is we are ultimately just making sure that I stay on track with my trading, that I don't get myself into a position where I go off course and I don't do the things that I know I need to do to make sure that I have the long-term success that I desire. An important concept of these investment rules is deciding in advance how we're going to diversify this account, right? So we know we've been taking a look mostly at, and I haven't gotten anything on silver. We haven't, like an important concept is we know what we're trading, what we're doing, what we're planning to do. And a lot of it is just making sure we stick to that important part of the trading, just to make sure that we're not deviating from our rules, deviating. And again, I could have closed those trades right there if I wanted to, if I allowed my instinct brain to kick in. But I know my goal is 30 pips. 30 pips. As long as I tell myself 30 pips, 30 pips, then I'm going to go ahead and be able to have the long-term success that I need. Imagine this. Right now, our balance is at 342. Are we worried about the 342 balance? No. I'm worried that the equity, the 95 right there, is going up. I'm worried about being able to climb these trades or do these trades one trade at a time. Kaizen, one step at a time, one day at a time on the journey. And using that as my guide to make sure that I'm moving forward in the right direction. Let's go. The beauty of rebalancing is that it effectively forces you to buy low and sell high. Didn't we just talk about that? I just said that right there. I just said that right up top right there. We sell high and we buy low. And it forces us to make sure that we move forward in the right direction every step that we take and every move that I make. And I know that people are watching me. Police. That's one of my mom's favorite bands. Anyway. Now let's talk about mistake number 3. And this is something that I know I still need to practice, right? That I know that I myself have to always constantly focus on, because it's so important that this lesson is done. And that is overconfidence, get real. Overestimating our abilities and our knowledge is a recipe for disaster, right? And now that just comes to the fact that I've been saying that as a Forex teacher, I have to understand the balance between being a student and being a master. That I have to understand that I need to have both of those energies in balance, both of those energies in place, to make sure that I'm guiding each and every one of you in the best way possible. Humans have a perilous tendency to believe they're better or smarter than they really are. Don't worry, let me put a big old asterisk. Let me put a big old $ exclamation point mental tattoo on my own freaking forehead, because I can I can definitely tell each and every one of you that I've run into that tendency multiple times in my life. Not only that, but I also know that I'm going to do the same damn exact thing as you move forward, right? It's just a part of human nature that you do get overconfident, especially if you've won, right? That joy, that feeling of winning, it puts a little bit of a pep in your chest, a little bit of pep in your step, and it does make you feel a little overconfident. And again, it's a technical term, and we just talked about this, the psychological bias of overconfidence. And to put it simply, we can consistently overestimate our abilities, our knowledge, and our future prospects. And that's so important to make sure that we keep our simple rules in place so that I don't end up doing something because of my overconfidence that immediately causes me to kill myself in these markets. Now, again, you've seen the highs of the journey. You've seen the lows of the journey. And there'll be plenty of more of those to come, believe me. But we know that right there, those highs and lows that we take can only help us to protect us from being overconfident, from putting ourselves into a position where, we end up doing something that we don't want to do. To put it, men are especially prone to overconfidence when it comes to investing. It's funny. I was reading before we talk about that more, I remember as I was first introduced to Sal Leto, my trading mentor, and we had a discussion about how women are sometimes the better, or I should say, let me back up. They say, Sal said, women are generally better forex traders than men. And I thought about this and I said to myself, really? He said, yeah. And he's like, why? It's because, well, men are just overconfident, egotistical bastards. And it's so funny to me because, well, they say that part of comedy is that the reality is true. And I thought to myself, yeah, I can be, I still am, and most likely I'll continue to be at times a overconfident, egotistical bastard. And the great thing about, or the power that women have over men, is that they don't think that way. Now, I always, and it was funny, and of course I want to choose, my words carefully here, right? But what's really cool is that I full-heartedly believe that women are a lot more analytical than men. I truly believe they got superior analytical abilities, superior processing abilities than men do. Man, we're just all about taking action, right? Like, think about it like this. The way I'm trading, it's just up, simple, up, downtrend, up, market structure. Yeah, that's good. Boom, just put it out there. But what I really love about women traders is, they're going to go through all the details. They're going to process all the little things that, I may see, I may not see. And when they point it out, it's like, whoa, like I didn't even know about that. And that's so freaking cool. And it goes to show, I can even take a look at some of the people that reach out to me, and a lot of the awesome questions I get are indeed for women traders. And I think it's so powerful, just to talk about that, because again, if we are to do this, right? If I'm to teach, if we're to do all the things, we have to understand that I can't be just biased. I can't just say, oh, this all looks great and all that good stuff. No, I have to go ahead and I have to understand that even as a man, I have weaknesses. I'm not the analytical type. I'm not the guy that's gonna, be able to process all the different little itty bitty things. I'm like, oh, just small stuff, let's just go. But what I can also understand is that my willingness to pull the trigger, my willingness to go in, is also a strength. So don't think that, there are different traits that both men traders and women traders have. Women and men traders have strengths in different areas, but are of equal strength. I want you to write that down. Men traders, women traders, they have different strengths in forex trading that are equal talents. Now, here's the great thing about forex trading, if we really think about it. And you know what? We're just going to go ahead and say it right now. And you can disagree with me. You can fight with me about this. I truly don't give a shit. Women in jobs, the same jobs, of same skill level, of compared to men, in the same position, in the same field, are paid less. We all know that for a fact. And if you pretend to ignore that, then I don't know what to tell you, but it's true. Women are paid less than men for doing the same exact damn thing. It's truly incredible. What I love about the Forex market, doesn't matter if you're a man or it doesn't matter if you're a man or a woman. Doesn't matter where you came from, what you've been through, what you're going to do. All you need to do is say, hey, come into this Forex market, jump in, make money. Women traders can make the same, less, or greater than male traders. There's no glass ceiling. There's no Forex law that says, oh, women traders have to make less than male traders. There's none of that bullshit that goes on in corporate America. None of that bullshit. Everyone has the same opportunity, and pardon my French, by the way, pardon my French, but everybody has the same opportunity to make as much money as they want in this market. Doesn't matter who you are. And that's beautiful. That's a beautiful, beautiful, beautiful thing. To know everybody has an equal playing field, that there's no conditions or none of that crap. And you know there's crap that goes on. You know there's crap like that goes on. You're telling it to yourself right now. How come this guy is being paid more than what I'm doing, but we're doing the same job? We don't want to talk about all these things because it's uncomfortable, but it has to be stated. Now, I don't even want to get. I'm going off on the tangent right now. The main point is men are prone to overconfidence. Women aren't. Women have that great strength that allows them to use their abilities and skills to make less, equal, or greater in the Forex market than male traders do. That's the point. Okay. If you can't predict the future, the most important thing is to admit it. I can't predict the future. I could take a trade based on what I see, based on where I believe the market is going to go, based on my simple set of rules, but I can't predict the future. This can go all the way to Downsville if it wanted to, but it could also go all the way to Upsville if it wanted to as well. That's the beauty of the Forex market. I can't control it. And it's a beautiful thing to know that I don't have to have that shoulder of responsibility on myself. All I have to do, all my responsibility is in these Forex markets is to just click the button and then go from there. If it's true that you can't make forecasts and yet you try anyway, then that's really death, isn't it? Right? I can say that I'm right now we're in this trade. We can imagine the market going down. However, if the market doesn't go down, I can't tell myself, that the sell trade or the down trade is still happening. I have to adjust and I have to accommodate, and I have to now make sure that instead of the direction I was previously in, I'm now in the opposite direction. So what is the solution to this overconfidence? What I just spent about the last 5 or 10 minutes rambling about. And the solution is to get real and get honest. And that solution is to hold on to our trades when we need to through the thick and thin, and rebalance and readjust when we have to. This will give us the market's return without the triple burden that active investors must carry, which is the high transaction costs, which is the management fees, because again, for managing our own accounts here, we're not relying on anybody else. And I know that this is going to be a conversation for well down the line, so we don't have to talk about this right now, but hefty tax bills. If you can't add value, if you can't create an asymmetric risk or reward, then the best thing we can do is minimize our costs. And so our goal with this trading style we're developing is to make sure that at the end of the day, we are minimizing the cost of our account. By admitting to yourself that I have no special advantage, right? I'm just a guy trading, showing you guys how I trade. I give myself an advantage because I do so much better than all the overconfident investors who delude themselves into believing they can outperform. I can't outperform. I cannot beat the market. I am not that great. I am not some genie. I am not some genie that is going to tell you that I'll win 100% of the time. It would be damn near incredible if someone could do that. And if they can, I'd learn from them. But I know full well, I know full well not to mess around with that bullshit. Again, I don't mean to curse. Sometimes that passion gets out of me. But the idea is that I'm not going to sell you on the fact that I'm going to win every single trade. All I'm going to do is show you, okay, this is what I'm trading. This is when I'm getting into the trades. This is what I see. This is my plan for when I need to get out of the trade. And we go from there. And again, that helps me with a couple of things. It keeps me honest, understanding that I'm not going to win every trade, that I don't need to be overconfident, right? If we can take there's a difference between having confidence and having overconfidence. Overconfidence means you can win on anything. It doesn't matter that you walk on water, we can go into further detail if we wanted to. But the idea is that you can do anything. The confident trader knows I know what I'm doing. I'm very capable in the plan that I built for myself. And I can also keep myself honest when I need to do those things for when I am losing. Because while I am a winner on the trades we've taken, I've also been a loser on the trades that I've taken. I've been a winner and a loser. And so if I can admit to myself on this recording, out in the YouTube verse, then I am a winner at trading, and then I am a loser in trading, then that gives me the proper mindset as a master trader to understand when I can let the trades go and when I need to put the cap on it. I think that's going to be very important for each and every one of us as we move forward throughout the journey. Now, next mistake. Mistake number 4, greed, gambling, and the quest for home runs. It's tempting to swing for the fences, but victory goes to the steady survivors. Greed and impatience are dangerous traits when it comes to investing. We all have a tendency to want the biggest and best results as fast as possible, rather than focusing on small, incremental changes that compound over time. Now, again, this is all in what we're talking about right now is in one of the books I love, Tony Robbins, Unshakable. Grab the book. Just do it now if you already haven't. In fact, pause the recording, go order the book, read it, and then come back to the video. But as far as what we're doing right here is that we're not swinging for home runs. We're taking trades 30 pips at a time. We're closing trades when we need to. We're hedging when we need to. Understanding that incrementally, we're moving forward. I always come back to the fable. You guys know the fable, the tortoise and the hare fable. In fact, one of the charms that I wear on my neck that I got. I'll tell a quick story. I was in the British Virgin Islands back in 2019. Lovely place, by the way. And if you ever get the opportunity to, I recommend that you go. I was very lucky, very grateful to be on that trip. And I come across this particular store where they were selling all these charms, and I got myself a tortoise charm. And what I have learned in the realm of the universe, the laws of the universe, I'm not trying to get too spiritual right here. Again, everyone has their own different faith, their own different religion, and that's absolutely perfect. But coming back to the story, so I grabbed myself this particular necklace, and I think, oh, wow, that's really cool. And I came then back to reflecting on that day, or reflecting on that particular moment in my life. I come back now to the story of Tortoise and the Hare, the old fable. Of course, everyone knows what happened. You got the race, and I hope I'm not making any spoilers for anybody, especially because I would imagine a lot of people that went to first grade, second grade, they've heard the story. But the story goes, the rabbit is just kicking the turtle's butt all day and all night. And because the tortoise is so slow, and he's just going step by step, piece by piece, and you can see him going, and it's he's just not doing a whole lot. The hare goes all the way. He is massively ahead of the guy, and resting on his laurels, the hare decides, okay, I'm going to go ahead and take a nap, and that's it. And I'll just wait and finish the race. Well, after the nap, the hare wakes up and realizes that the tortoise has won the race. And so that fable told us that slow and steady won the race, of course, right? And so that is also something that we're doing here in trading. We're not looking for big, massive home run changes to our account, and nor should we want to, because how do we go ahead and process those emotions of getting the big one, right? Or not doing, or going through them, but not doing the work in order to satisfyingly grab them. And so in this approach that we're taking to trading, we know that we're going the slow and steady route. We know that we're doing this one trade at a time, that we're grabbing 30 pips one trade at a time, that we're closing one trade at a time. And we've been doing this consistently for 14 days, and we've been able to keep going in the right direction. Now, again, we talked about the fact that we're going to be winners and losers in this market, and there's nothing that we can do about that. But as long as we remain steady and vigilant, and we keep our heads to the grindstone and keep going at this day by day, brick by brick, never miss a day, never take days off when the market is open, then we have the perspective, or we become the tortoise that is doing all this, that is going in the markets, and we're collecting our trades one trade at a time. Now, could there be moments where there could be hair moments in? Let me repeat that. Could there be a situation where we become a hare, where we just inadvertently walk into a home run? Of course. Of course that could happen. But when that happens, what we don't do is then become the hare and just rest on our laurels. We immediately go back to tortoise mode and say, okay, what's the next trade? What's the next step? Frankly, what's next? What does the next day have in store for me? What does the next adventure, what is the next minute, the next hour lie ahead for me? And if we can focus on going in that direction, then we're going to be absolutely perfect. We're going to be absolutely perfect. So the best way to win the game of investing is to achieve sustainable long-term returns. But it's enormously tempting to swing for home runs, especially when you think other people are getting rich faster than you, right? And that is such a, this one right here, comparison. That's a killer. That's a killer in trading. I've done this so many times. No, I watch people make about 15% on their account. I watch people make 100, 200%. And I remember this gentleman got about 4 million on his account 4 million USD. And I'm thinking to myself, wow. And I was like, I want to learn all of it. I want to get to those results like now. Well, what I realized back then is I didn't know the story that he himself went through to get to all that. I only saw at that moment, at that part of his journey, the rewards. What I didn't see was day one, and then day two, and then day three, and then day four, day five, day six, etc. I didn't see all of those particular days that came before. And so the disservice that I was placing was the fact that I didn't understand at the time that there was a road that he had to travel in order to get to that particular path. And that's the thing. Some of you may be looking at my account right now and going, okay, those are the results of that day. And this is something I've told very specifically in the trailer. If you're taking a look at the trailer on my YouTube channel, is don't just look at this day. You have to look at the other days that happened before. You have to go ahead and you have to take a look at, okay, those were the results of the results, but what happened on day one that allowed me to then go from day two, that allowed me to go from day three, that allowed me to go from day four, that allowed me to go from day five and day six, and you keep on going. Because if we don't give ourselves credit for the days that led up to the journey, and if we don't concentrate on just one day at a time, Kaizen, one day at a time, one piece at a time, one step at a time, then yes, you fall under the danger of comparison. And what that does is it does not place you in the right mindset in order to trade. I know full damn well that there are people out there that are getting a lot more than me in the investing market. I know a lot more people that make what I make in just a second. I know people that make 1,000, 1,000,000 times more than what I make, that what I just made right now in just a second. And I keep that perspective because I understand I'm not at their level yet. I'm not at their experience yet. I'm not at their journey yet. The financial media reinforces the sense that the markets are just one giant casino, an intoxicating get-rich-quick scheme for speculators. And this is not, okay. I want everyone to be perfectly clear on this. The markets, what we're doing right here, is not a get-rich-quick scheme. No. What this is, what this game truly is, when it comes down to it, is that we are taking every single trade one step at a time, one piece at a time, one brick at a time, one trade at a time. And that's how we are able, let me just get myself into a sell trade. That's how we're able to keep growing our account. We're not here for the quick one. We're not here for the big one. What we're here to do is we're here to ensure that we can still keep trading. We maintain our equity. We celebrate the days when we're able to turn our equity into a bigger gain, into a bigger win than what we did the last day. And then our job would be to, of course, build upon that. The stock market is a device for transferring money from the impatient to the patient, right? So this right here, so we say stock market, but the Forex market works in the same principle. The impatient will lose, the hares will ultimately lose and the tortoises will ultimately win. There's no ifs, ands, or buts about it. That's the way the game goes. And that's the way that the game will continue to go. And so if we do feel that there is that comparison that we need to make, or if we feel like we need to make the big one each and every time that we're trading out in the Forex markets or something to that effect, then I leave you with one simple, oh, let me close some of these trades here because the arrow just disappeared on me. Oh, hold on. There we go. Okay. That's that danger of not keeping your accounts in check right there. But what was I saying? Yes. So the moral of the story is it's a marathon and not a sprint. So what we do is we keep on going in the race, and we do this one step at a time, and we do this one piece at a time. All right, everybody, we are back in business. So it took us a minute to get a trade opportunity underway, but we do indeed have it as we transition, or we move the scene over to our demo account where we're trading platinum. We could definitely see that we have a down arrow for us. And of course, this market has indeed been trending down in the downside direction right here. We can definitely, if we wanted to go ahead and even just zoom out a little bit, boom, it's just been a straight slide down. And that is good news for us if we're looking for a sell trade, which our arrow right here is indeed telling us. Now, just taking a look at exactly the origination or the reason behind this particular down arrow, I can already see it that the reason for that is the fact that we did cross, just taking a look right here, we did indeed cross this particular line right over here. Bam. Just move that up a little bit. Okay. We can see that definitely our arrow right here, or our candle, did indeed cross that. So that, of course, signaled to us that we have the lower high in place. And of course, the objective, the idea is that we always want to go ahead and we want to buy low and we want to sell high. So we're going to go ahead and wait for this candle right here to close. Of course, we don't want to make any impatient moves. We don't want to go ahead and do anything too hasty. We certainly do want to make sure that we're trading this candle in the right direction right here. And it looks like my timer right there froze for a little bit. I was like, oh, what's going on? But no, it is back. It is back. Gold, silver, we're not doing anything. I did miss this sell arrow right here, so I was not able to take a trade at that particular point in time, but that is okay. Missed opportunities, as we said, are going to come as we move along this journey. We can't get to every opportunity, nor do we want to force ourselves to trade in every opportunity. Don't put that pressure on yourselves. Understand that your opportunities will come when you are ready to take those particular opportunities. So with that being said, we're just waiting for this particular candle here to close. I got about 6, 5, 4, 3, 2, 1. Here we go. So we're going to go ahead and place a sell trade right there. So we're in the sell trade as we speak. So we're going to go ahead and let this trade play out. So what were we talking about? Yes, we were talking about the fourth mistake that traders make, which is the greed, swinging for the home runs. We talked about the tortoise and the hare fable that I alluded to a little bit earlier. And what we also have to understand, just kind of coming back to that point, the solution, which is to make sure that we are, there we go, that we are, have to understand it's a marathon, not a sprint. Here's another thing that we also want to pay attention to as well. The vast majority of what purports to be analysis and information about the stock market, forex market, crypto market, just lump all that into this particular quote, is actually just designed to generate activity to get us to pull the trigger, because somebody out there will make money out of the fact that we're being active. If it's actively generating information, we should shut it off, right? So think about it like this. The only things that I'm using for taking my trades, I'm not going on to CNBC, I'm not going on to Bloomberg, I'm not going looking at my newspaper. Now, I am checking the most important economic calendar events of the day. So, if we go back to forexfactory.com, right? Well, this trade is playing out, right? So I could take my eyes off it for just a second, but we will come back to that particular trade. What we have to understand is that we've already passed this particular news right here. So let me go ahead and circle that. So this is what we're really paying attention to. And of course, we do have some news at 2 o'clock p.m. Eastern time, which is noon Mountain time. Now, that's not particularly when we trade. So it's not important to understand that news event is coming along, because that will certainly move the market. But because this is not or I should say that this time right here is not the time that we trade, I'm not necessarily going to pay attention to that. But instead, we paid attention to this. And we could see that there was an effect on the market after that news, as right now we are seeing the downtrend continue, at least for platinum. The candle did move, right? The candle did move into the next candle, or I should say the arrow moved to the next candle. So that means we are going to be taking another sell trade as long as this particular candle closes right where it is. So we've got 2 minutes, a little bit above 2 minutes, in order for that decision to hold true. So just coming back now to what I was saying about activity generating information, right? If the news is telling you to do something, if Bloomberg, if the Fox Business News, I think NBC has some business, oh, well, it's CNBC, but if there is some news out there, right, that we're not basing our information on something that is tangible that we can see. Like, for example, we understand that we're in a downtrend right now, so it makes sense for us to take a sell trade at the high point of a downtrend, because we are going to anticipate that prices are going to continue to move down in this particular direction. Now, if we were just we were taking these particular trades because some person off at CNBC said something about this, then what we're doing is that we are basing our information off of what I like to call gossip. And the gossip won't help us in terms of understanding the movements of the markets. We have a very, very clear, simple set of rules that we follow. Trend, which dictates the market that we're in, bear or bull, and that bear or bull market will determine if our arrow is pointing up or down, which is our entry point. And once that candle closes, as long as the arrow is still there, then we have the ability to still continue with that trade and allow the trade to fully play out. Create a more wholesome information diet. You're feeding your mind thoughts that will make it much easier for you to think and act long term. So here's our wholesome, it's our wholesome information diet, if you will. We look at trends, we look at the market structure, we look at the entry point, which is our arrow, which gives us a direction of where price is wanting to continue to go, or an indication that price will continue in this direction. Place another sell trade right there. And by doing all of this, this allows us to go ahead then and move forward in the right direction. Now, another mistake number 5. staying home. It's a big world out there. So how come most investors stay so close to home? When it comes to investing, people also tend to stick with whatever they know best, preferring to trust what's most familiar, or what we like to call a home bias. Now, this home bias is a psychological bias that leads people to invest disproportionately in their own country's markets and sometimes to invest too heavily in their employer's stock in their own industry. Now, think about it like this, right? This all comes back down to diversification. We're not just looking at gold and saying, "Hey, gold is the thing. That's all we need." No, we also are looking at silver, and we're putting some practice into action with silver. And now we're looking at platinum. And guess what? The next week, we're also going to be looking at another pair so that we can add to our arsenal. Again, it comes back to diversification. If there is not a trade that is working for one particular pair, then that doesn't mean that we can't then explore other options that are out there in the forex trading market world. We don't want to necessarily just stick with one pair. Again, you can get rich off of one pair. I'm definitely not saying that. However, there's still other pairs out there to explore. There are other opportunities that are going to help us with generating, trade opportunities, making sure that we're sticking to one trade at a time. And so it's important for us to understand that. And it's very important for us to still go ahead and continue to move in the direction that we want to move. We're looking at platinum right now, and it certainly doesn't look like it unless there is some miracle out there. But again, we don't bet on the home run, we bet on each trade per trade basis. But it definitely doesn't look like that platinum. I would be comfortable or I would be confident to place platinum on our real account right now because we're not seeing the anticipated or the simulated results that I would desire if I was trading this in my real account. So what is our next plan then? What is our next step in understanding that platinum may not be the move right now? Well, what will happen next is we're going to look at our next players. I mean, if we look at view, right? So, we're letting this trade play out, and trust me, I'm looking at gold, I'm looking at silver, really nothing there right now. But coming back, if we look, there's still other pairs we could take a look at. Gold versus euro, cool. Let's see. We can also take a look at some exotic pairs. We can look at some majors pairs. We can look at some indices, futures, stocks. We could do actually trade forex stock trading. We could do some crosses. We could do some oil. We could do crypto. So there's a lot of variety when it comes to trading. And so what that means in our perspective, right? So what does that mean perspective wise? It means that we don't want to just be stuck with just trading one pair or have the mindset that we only just need one pair. It's a big world out there. There are plenty of other opportunities that are out there. And the more that we explore these opportunities and the more than we can add, the more diversified, the more adaptable we can become. And it allows us to just keep growing and learning as our path to becoming master traders evolve, my friends. So the rational investor in the United States or Japan would invest about 1% of his assets in the Swedish market. Can it make sense for Swedish investors to invest 48 times more? No, right? Like the rational investor doesn't the one thing about the rational investor is that they don't believe in markets that are outside. We're so what I like to call we have a nationalist bias. Now, it doesn't mean to say that we're all, nationalists, because that's a whole different political topic. And this is not the time nor the show to be talking about that. And I made myself a cost average on platinum, by the way. So we had another sell trade that candle just moved. So that would be another opportunity to look at later. But just kind of taking a look, and I'm just taking a look, nothing right now. But as we move forward throughout this particular journey, we're going to understand that there are other pairs that will have different strategies that we are exploiting, so that the objective or the goal is to make sure that everybody is profiting in what we are doing. So instead of just sticking to just one pair, just even sticking to the United States dollar market, we're ultimately expanding to the Great British Pound market. We're ultimately exploring or exploiting what's happening in the euro, and then the Japanese yen, and then the Australian dollar, the Swedish franc. I'm sorry, the Swiss franc, and then the New Zealand dollar, and then there's all these other different major markets or minor markets or exotic markets that we're also exploring, because the world is a big place. The world is a big place, ladies and gentlemen. So for us, it's important to understand that and to take advantage of what we can take advantage of in the market. And I see that we have a sell arrow coming along with gold. So we're going to take a look at that after that candle closes. So we take a look here. So we expand our horizons. That's the solution. We expand our horizons. The best investors keep a long-term perspective, so you can avoid falling into the common trap of favoring whatever market is vogue. So we're avoiding falling into the trap of just favoring gold or just favoring silver or just favoring platinum. By doing what we're doing right now, we're building an idea, or we're building a plan of, okay, what can I actually go ahead and start to take advantage of in the market? And by diversifying internationally, we're not only reducing our overall risk, but also increasing our returns. So all that goes back to asset allocation. That goes back to diversification. It just allows us to, again, move forward in the right direction and be able to explore all these different opportunities that are made available to us. Now, here's mistake number 6. Here's mistake number 6. Negativity and loss aversion. Your brain wants to be fearful in times of turmoil. Don't listen to it. So this comes back to our simple rule system and how we go ahead and we do what we need to do to make sure that our equity and everything stays on the right path. Human beings have a natural tendency to recall negative experiences more vividly than they do positive ones, negativity bias. So let me put this into perspective. It's very easy for those who are watching right now not to necessarily pay attention to day 1 and day 2 and parts of day 3, parts of day 4, 5, 6, 7. But what y'all are thinking about, or what you were paying attention to, and again, I'm just speaking in terms of the person that's just starting out who's excited about the prospect of Forex trading. What we were really thinking about are the days that I took some losses in this market. Not the wins that have been transpiring, but instead we were talking about the losses. And that's perfectly okay, of course. I understand that what we're all, we're really looking to see is how well we can go ahead and do in this particular market and not have to worry about the excessive drawdown or the negatives that come with trading. We all just want to, again, it goes back to, we don't want to come to terms with the fact that there are going to be losses that happen, that we will indeed lose trades. We got about 10 seconds before that candle closes. Remember, on average, corrections have occurred about once a year since 1900, and bear markets have occurred about once every 3 to 5 years. What does that mean for us? Let me get into the cell. What does that mean for us? Let me get into the cell. What does that mean for us? It means we have to be prepared for when the market And again, this is, of course, this is a shorter term than, 5 years, but we have to prepare ourselves for the fact that markets can turn from bear to bull. Markets can turn from bull to bear. Our trades that we take in based on the initial direction can change. And thus, we have to prepare ourselves for the hurt or the losses that can occur because of that. Now, you and I both know that the best investors relish corrections and bear markets because that's when everything goes on sale, right? People are buying, people are selling on gold, on platinum, right? Those are kind of the trades that we're in right now because everyone has an understanding that a bear market like this can't last forever. And everyone knows that a bull market can't last forever either. So you have different directions in which people are taking trades. Now, all we're doing is following the common trend of where most of the recent activity or most of the activity has been transpiring. Now, again, that we don't have a crystal ball to determine, okay, we know what happened in the past and we're using that to help us make decisions in the present, but we don't know what's going to happen in the future. We don't have those crystal balls. We don't have anything that can predict the future. So what we want to do to help us with that is just get a clear understanding that yes, we're taking trades based on what we see and we are favoring the sell. However, this can turn out to be a buy opportunity instead, and we would just have to accept those particular facts. The trouble is losing money causes investors so much pain that they tend to act irrationally just to avoid this possibility. Again, this all goes back to what I was talking about with the circle of anxiety. You're losing money. Again, 19 to 95% of the trades that we take are geared towards a drawdown initially. And because of that, that causes investors to think irrationally. That circle of anxiety. Let's go to the 1 minute candle. Let's do that play-by-play analysis like on the sports games. Let's close out these trades super early and just take the minimalist amount of profit so I can avoid a loss. Let's hold on to these losers because we think that our trade is going to win. So we want it's going to come back. That's what we tell ourselves. And then, of course, we revenge trade. Oh, the market just did this to me. Oh, I'm going to get that market back. And now we've done all that. It said, do I want to take a trade? And that's where the circle is a self-fulfilling prophecy of quitting the Forex trading game. And I know that circle. I've been in that circle many a times. I've spoke about exploring this circle and laughing about it because I know exactly each stage of those cycles and just going, it's crazy. But one reason why the best investors are so successful is that they override this natural tendency to be fearful during periods of market turmoil, right? So we're riding in our trades. We're still doing our thing, no matter what the previous days did to us. Day one had its own episode, but then we translate to day two, and that had its own episode, day three, and et cetera, and et cetera. And because we have this mindset of, okay, just because the previous day happened doesn't mean that the past indicates what the present or the future will hold. Well, then we keep our confidence knowing that we are indeed moving forward in the right direction. And so what's the solution? Well, preparation is key. By failing to prepare, you are preparing to fail. And first of all, it's important to be self-aware. It's important to be self-aware of, what our plan is for our trades and exactly how we go ahead and we take these particular trades. It's important to understand that what we're doing, just taking a look, it's important to understand what we're doing is we're following a 3-step system We're following a 3-step system that allows us to identify what the trend is. What are we looking at for trend? Then it helps us identify, okay, what is the direction that we're looking for? Are we looking for the sell? Are we looking for the buy? And then do we have our risk management in place? Do we know what our lot size is for the trade based on what our equity is? Do we understand when we're entering a trade, and do we understand when we're exiting a trade? And then we keep going from there. So it is important to be self-aware. Once we know that we're vulnerable to negativity bias, right? So we understand the thoughts and emotions that can come into trading as we're taking these trades, we can counter those psychological tendencies. In other words, the single best way to handle market turmoil and the fears it could trigger is to be prepared to grasp and condition yourself for those feelings. And that's why I religiously say, before you even think about trading on a real account, before you even think about doing that, you must, not I should, not I would, because if you say I should, I would, then you're shitting all over yourself. Learn that from Tony Robbins too. But if you say all that, then it's the precursor to regret. So instead of saying the should and the would, just do it. You must practice on a demo account to get those feelings, to understand the feelings of trading on the pairs and just sticking along with your plan. It also helps immeasurably to have a mentor, to have someone who you can ask questions with, who can help guide you and address the fears and concerns during the most difficult times, reminding you the strategy that you agreed upon. In wiring, when you were calm and unemotional, and make sure that it's still valid. So again, we're reminding ourselves, and the daily trading calls, the daily videos that I do helps remind me, okay, I know my plan. Okay, I know what to do here. Okay. And we just keep on going. And we do that day after day after day. And we don't have to switch the beat on that. And that helps us as far as going in the right direction. So now let's go ahead and let's keep the conversation going. So those were the mistakes that you can make in the market. Again, those were the 6 mistakes that you can make in the market. And I know that we kind of did a brief kind of glossing over on those mistakes. Just kind of, again, reading this amazing book by Unshakable by Tony Robbins. I'll keep mentioning it. You should take it. You should get a copy. Put that on your calendar. Put down your Amazon book list, Barnes and Nobles. I don't know where you get books nowadays, but you should definitely make sure you get that on your reading list. Now, I want to talk about another topic out there called, real wealth and making the most important decision of your life. Now, every day, think as you wake up, today, I am fortunate to be alive. I have a precious human life and I am not going to waste it. And that's actually one of the things I write in my journal. I am so grateful now that I have this day and many days to come. Because every day that we are trading in the market is not granted. It is not granted. It is not a guarantee. And so to take every day and just understand, you know what? We're moving. I'm giving away the knowledge that I need to make strong traders out in the market. If I understand that I am living in my purpose of Forex trading, of coaching and podcasting, and I'm doing it every day. And I'm grateful to be a part of that particular journey, to have that particular call, that particular role. And, I'm living in my purpose. Then I guarantee you'll never, ever, ever work a day in your life. When people dream of becoming rich, they're not fantasizing about owning millions of pieces of paper with pictures of dead people on them. What we really want, right? We're not thinking about having stacks of cash right here. I'm not trying to kiss no Benjamin Franklin on the paper lips. Didn't mean to grant such a depiction right there, graphic depiction right there. But point remains, right? That what we really want are the emotions we associate with money. For example, the sense of freedom, security, or comfort. We believe money will give us, or the joy that comes from sharing our wealth. Think about it. We want to trade because it gives us a sense of freedom. It gives us, if doing this particular strategy that I'm doing right, a sense of security. And the goal or the idea is to generate the money that will allow us to also get a sense of comfort as well. Not only that, but the joy that comes from sharing our wealth, right? Because, hey, I am a 10, 11, 12 counting figure earner. One of my daily affirmations that I write down, I know I don't need all that freaking money. I know that at the end of the day, I am more than likely going to give that money away, whether it's charities or whether it's investing in other people, becoming an angel investor, fueling other people's passions with my infinite resources. Like that is really what I want to do. Not just to be rich and just hoard money like it's nobody's business. But what does that mean? Are we really in it to just have stacks of paper with dead presidents on them? Is that what we're doing this for? No. What we're doing, the purpose of what this is all about, is the feelings we're after. That joy, that freedom, that security, that comfort. Those are all feelings. That's not tangible. That's not in the sense of touching the money. We don't want to touch the money. We want to get the feelings that comes from getting the money that we can touch. Real wealth is emotional, psychological, and spiritual. What we want to do is we want to, throughout this journey, live what's called an extraordinary quality of life. And so we all crave an extraordinary quality of life. It doesn't matter who you are. You don't dream of just living blah. You don't dream of living in the mundane. You don't dream of just being average. You're on this channel. You're still watching day 14 after being through day 1, which, by the way, I so absolutely appreciate the heck out of you guys. Or even if you're just watching day 14, which if you are, go back to day 1. You need to start from day 1 before you come over here, right? That's my rule. But the idea is that we haven't been watching me trade just to watch me press buttons and make money, and that's it. What you guys are doing by watching these, and what I want from you to understand, is that you guys want the same things that I do, or you guys desire the same things that I desire. You desire to have more freedom in your life. You desire to stop struggling. You desire to be able to take a look at this gigantic opportunity that we have on our eyesight, and through that, capitalize on what we have here. And the reason that you've gone through and watched me go up, go down, go sideways, go down, go up, is because you know that those are temporary pains, temporary setbacks to the promise that's coming to us. I will repeat it again. This is a mental tattoo that I've learned from Dr. Ariaza. When the promise is clear, the price is easy. I know, I am confident in my heart of hearts, in the courage of my convictions, and my unquestioned truths that I'm going to be successful in this market. And through that, I will generate an army of people who will also be very successful in this market. So what are those prices that I have to pay for realizing that particular promise? Well, I have to realize that there are going to be bumps on this road, and we're going to close everything down and get ourselves back to even here after this candle. But we have to understand that there are bumps on this road. I'm going to have wins. I'm going to have losses. And however, the variety, we know that every day is different in the market. So every day that we trade is going to be absolutely different. And so if we understand that and we learn that, then we know that by taking this journey, it is worth it in the end. The science of achievement. The most successful investors have left a trail of clues for us to follow, right? So think about it like this. Who's watched Scooby-Doo? Who's watched Scooby-Doo? Of course, this is a recording, so you don't need to raise your hands. You can just follow along with me. But in the show Scooby-Doo, you've got the villain, the monster, who's obviously just a guy in a mask. If you didn't know that, I'm sorry I spoiled the show for you. But the idea is that the gang in that show, so you got Shaggy, you got Scooby, you got Freddy, you got Velma, you got Daphne. These 5 individuals are able to catch the monsters because they leave clues that they can easily track and figure out the mystery behind what's going on in each and every episode. So my job here is to show you, I basically want to be the villain in a Scooby-Doo financial Forex episode where the episode only lasts about 30 seconds because I've already given you the clues. Like, I'm not trying to, that's the objective, or that is the science of achievement that I want to create for you guys. And so as long as we sow the same seeds as the most successful people, we'll reap the same rewards. And that's financial mastery. Now, it's not about just sowing those seeds and doing it once and that's it. It's repetition. That's how we get to mastery. Repetition, excuse me. Repetition is, in fact, the mother of mastery. Also learned that from Tony Robbins. It is very funny how Tony Robbins, who is a life coach, fantastic gentleman, just absolute awesome giver, how a lot of his lessons, even if it's not directly proportional to what we're doing as a Forex trader, a lot of those particular lessons apply to what we're doing. And so that's the beauty in teaching, is that you get to enjoy all these absolutely wonderful people that have come into your life to mentor you, and even if they're not in your industry, right? They're not in your industry. There's still advice that they're still qualified to where their advice can help you in this journey in one shape or form. Now, the first step to achieving anything you want is focus. Wherever your focus goes, your energy flows. When you put your entire focus on something that really matters to you, when you can't stop thinking about it every day, this intense focus unleashes a burning desire that can help you obtain what might otherwise be out of reach. Now, think about that. I have not stopped this trading right here. I have been on here day in, day out. Yes, I do talk. I do talk on the microphone. I educate. I do help and teach topics as I am trading. But my primary focus, 3, 2, 1. Okay, we are done for the week. So let's close out these trades that we no longer need. Okay, that's it. No more. Now we do the same thing for our platinum account. Okay, let's close that. Let's close this. And We'll close this and we'll close that. Okay, so that's no more margin on here. No more margin on here. We're good. So, by the way, how did we do? So we went from 79. I checked the beginning. I forgot to put this in the beginning of our episode, so I'm sorry. I apologize. But we are about 78, 79, and now we're about to 88, 89. So that's a win. We won the day, guys. That's all we need to worry about is winning the day and moving forward in the right direction. So I'm happy. I'm happy. And I hope that's the feeling that you also get after a tough week. Because this has been a tough couple of days, right? Where it's been a loss and then a loss and then a loss and then a loss, and then we come back. And I want people to feel that yes, the short-term setbacks are going to be there, but there is going to be there will be a turnaround in your trading as long as you stick to the strategy that you are doing. And so there are more steps that we want to talk about. It's not just focus. There are so many other components that we want to talk about to really understand the qualities that you need in order to become a master trader, to unleash that potential that's within you. But again, we have got all the time in the world to talk about that. So we will indeed go into those conversations, but it won't be right now because our market is about to close here in about, count them, 3 minutes. And right now, our objective is to take what we did today, take the weekend, don't look at trading, go do whatever it is that you want to do. And then we come right back here on Monday and we get things set. That is my mentality. That is my objective for after 10 o'clock. I go from 5 to 10 a.m. Monday through Friday, and then that's it. I'm done. No more trading. So we're going to go ahead and conclude this third trading week. And as price goes down even more, that's okay. All we care about is not how much we win or not how much we lose, but is our equity still in the game? Is it still ready to go for the next day of trading, which will absolutely be day 15 of our absolutely amazing journey together, my friends. And so with that being said, this has been Jordan Rosario of day 15 of the Forex trading journey. I hope each and every one of you have an absolutely amazing rest of your day, absolutely amazing rest of your weekend. And we'll be back here on Monday for day 15 of the Forex trading journey. Happy trading, my friends.